Have you ever dreamed of building wealth while you sleep? What if I told you that creating a passive income empire isn't just a dream, but a reality within your grasp? Today, we're diving into the secrets of the wealthy, simple yet powerful steps to turn your finances around and build lasting wealth. Stay tuned as we uncover the blueprint to financial freedom that's been right in front of you all along. All right, let's dive into our first game changer, understanding assets and liabilities. Imagine two buckets in your financial garden, one for assets, one for liabilities. Assets, my friends, are your golden geese. They're the power players putting money into your pocket. Think of them as your financial cheerleaders rooting for your wealth to grow. Now, switch gears to liabilities. These are the silent pickpockets, sneakily taking money out of your pocket. They're like those pesky weeds in your garden, looking harmless, but actually stifling your financial growth. Here's where it gets really interesting. Most people mix these up. A fancy car or a luxurious boat might look like assets, but if they're guzzling your money without replenishing it, they're liabilities in disguise. The real assets are often quieter, working tirelessly in the background, like a rental property generating steady income or a stock paying dividends. So, how do you tell them apart? Simple. Grab your bank statement. Every month it's telling you a story. Is something consistently putting money in? That's an asset. Is it regularly taking money out? That's a liability. Remember, not all that glitters is gold. To build a passive income empire, you need a keen eye to distinguish your true assets from the liabilities that are holding you back. This understanding is your first step towards financial mastery. Next up is the golden rule that could revolutionize your financial world. The 70-30 rule. Picture your income as a pie. Now, imagine cutting this pie into distinct slices. The biggest slice, 70%, is for your living expenses, everything from your morning coffee to your rent. This is about living comfortably, but not extravagantly. But here's where the magic happens. The remaining 30%? That's your golden ticket to wealth building. We're going to slice this 30% into 3 equal parts. First, 10% goes to giving back. It's not just about generosity, it's about creating positive karma and building a network of abundance. Whether it's donating to charity or helping out in your community, this slice enriches your life beyond just money. Second, another 10% is dedicated to annihilating debt. This isn't just chipping away at what you owe, it's an aggressive push to free yourself from the chains of debt. Every extra dollar here speeds up your journey to financial freedom. Finally, the last 10% is your investment rocket fuel. This slice is all about growing your wealth. Consistently investing this portion can turn the tides of your financial future. The 70-30 rule isn't just a budgeting tactic, it's a mindset shift. By following this rule, you're not just managing money, you're building an empire. This simple yet powerful strategy is your stepping stone to a future where your wealth works for you. Let's unlock the third crucial step: diversifying investments. Imagine you're a chef in the grand kitchen of finance, and your ingredients are various investments. To cook up a robust financial portfolio, you can't just rely on one ingredient. That's where diversification, the art of spreading your investments, becomes your secret recipe for success. Think of it as planting different seeds in your financial garden. Each seed represents a different type of investment, and each has the potential to grow in its unique way. Here's how you can diversify your investments wisely. 30% in income-producing stocks. This is like planting fruit trees that regularly give you fruits, in the form of dividends. We're talking about solid, reliable companies that have stood the test of time, consistently paying out dividends to their shareholders. 30% in real estate or equivalents. Real estate is like the evergreen tree in your garden. Whether it's through physical properties or REITs, real estate investment trusts, this sector often provides steady, long-term growth and rental income. 30% in managed money. This is like having a seasoned gardener tending to a specialized part of your garden. It could be anything from following a successful investor's portfolio to having a professional manage your investments. 10% in cash or equivalents. Lastly, always have a cash reserve, akin to keeping a supply of water for your garden. It's your safety net, ensuring you're prepared for any unexpected financial droughts. Diversifying your investments isn't just smart, it's essential. It's about not putting all your eggs in one basket and having different income streams that can withstand economic ups and downs. Embrace diversification, and you'll be well on your way to cultivating a thriving financial empire. Step 4 on our wealth building journey is about a strategic move, leveraging assets instead of selling. Imagine you have a golden egg. The common urge might be to sell it for immediate gain. But what if I told you there's a smarter way? Leveraging your assets is like having a golden goose that keeps laying eggs. This strategy is like a chess master's move in the game of finance. Instead of selling your assets and losing their future value, you use them as leverage to get a loan. This is a powerful tool, especially when used wisely. Here's how it works. Securities-backed line of credit. Picture this. You have a stock portfolio. You can borrow against it up to a certain percentage of its value. This loan comes with low interest, and the best part? Your stocks continue to earn dividends and appreciate in value. Real estate equity. If you own property, you can leverage its equity. This means taking a loan against the value of your property. It's like unlocking the hidden cash in your real estate without selling it. Leveraging is about making your assets work harder for you, not just sitting idle. It's about smart financing, using the power of your existing assets to fuel further growth, all while keeping their income potential intact. Remember, in the empire of wealth, it's not just about what you have, it's about how ingeniously you use it. Let's unveil the fifth and a rather intriguing strategy, the buy, borrow, die strategy. This might sound like a plot from a financial thriller, but it's actually a time-tested tactic used by the savviest investors to build and preserve wealth. First, buy. This is where your journey begins. You acquire assets, stocks, real estate, anything that grows in value or produces income. Think of it as building your treasure chest, piece by piece, with assets that aren't just valuable but also have the potential to increase in worth over time. Next, borrow. Here's where it gets clever. Instead of selling your assets and facing taxes, you borrow against them. This is leveraging your investments to gain liquidity without losing the asset or its income potential. The interest rates for such loans are usually low, and the best part? The loan itself isn't considered income, so it's tax-free. Finally, die. It might sound morbid, but it's a critical part of the strategy. Upon your death, your assets are passed to your heirs. The key benefit? The step-up in basis rule. This means your heirs can sell the assets at their current market value, not what you paid for them, potentially avoiding significant capital gains taxes. This buy, borrow, die strategy is a masterclass in wealth management. It's about acquiring assets, using them as leverage, and eventually passing on a legacy with minimized tax implications. It's not just about making money, it's about smartly preserving and transferring it across generations. Moving on to our sixth secret of the wealthy, crafting your investment strategy. This is where you turn from a passive saver into an active wealth builder. It's not just about putting money away. It's about making that money grow exponentially. Let's break down how you can do this with precision and foresight. Your investment strategy should be like a well-oiled machine, designed to work efficiently in different economic weathers. Here's how. Focus on cash flow investments. Choose investments that don't just sit there, but actively bring money into your pocket. This could be dividend-paying stocks, rental properties, or bonds. These are the workhorses of your portfolio, consistently churning out income. Avoid timing the market. The market is like the ocean, unpredictable and constantly changing. Trying to time it perfectly is a gamble, not a strategy. Instead, focus on steady, long-term growth. Consistency is key. Invest in what you know and use. Stick to industries and companies you understand and interact with daily. If you love a product or service, chances are others do too, making it a potentially sound investment. Reinvest dividends and profits. When your investments pay out, reinvest that money. This compounding effect is a powerful force in growing your wealth over time. Your investment strategy should be unique to your goals, risk tolerance, and interests. It's about making informed choices, staying the course, and letting the power of compounding work in your favor. In the world of investing, patience and persistence are your best allies. Now the next one is focus on cash flow, not market timing. This is where we shift our mindset from chasing market trends to building a steady stream of income. It's like choosing to plant a vegetable garden that feeds you regularly, rather than hunting for a big catch now and then. Market timing is like trying to catch a falling knife. It's risky and often leads to more misses than hits. The market's ups and downs are unpredictable, and trying to outsmart it is a game few can win. Here's a better strategy. Steady income streams. Focus on investments that pay you back consistently. This could be through dividends from stocks, interest from bonds, or rent from real estate. These are your financial anchors, providing stability and continuous cash flow. Reinvest your returns. When you receive dividends or rental income, reinvest them. This reinvestment fuels the growth of your assets, turning small streams into mighty rivers of income over time. Build a diverse portfolio. Diversification isn't just about reducing risk, it's about ensuring multiple cash flow channels. Different assets react differently to market conditions, so a well-diversified portfolio can provide more consistent overall cash flow. Remember, in the long run, it's the steady, predictable cash flow that builds true wealth, not the fleeting wins from market timing. By focusing on cash flow, you're setting yourself up for sustainable financial growth with or without market fluctuations. Building a passive income empire is a journey of wise decisions and strategic actions. Embrace these principles, and you're on the path to financial freedom. If you enjoyed this video, please give it a like and share your thoughts in the comments. For more insights on finance, investment, business ideas, and financial education, don't forget to subscribe and hit that notification bell. Together, let's master the art of wealth.